Good afternoon, everyone. This is Henry, and as we get into tonight's video review, I wanted to start with what I'm, kind of quoting to you here as being some long-term picks. Now, there's not anything that I'm doing with these in this moment. Again, the long-term of stocks right here, I don't know how much I'm really willing to commit to that, but I do make note of situations when you see a company like Wingstop and they report earnings and just really, blow the top off of this thing, and you think, I wonder if there's a theme here that I might be able to capitalize off of. And I just think it's interesting to see them doing so well, and then to move over to companies like Chipotle, where really has some interesting things that I study as far as technicals are concerned. The biggest part of what I like it for a long-term pick, you see how the histogram and the momentum of this squeeze signal are beginning to shift on the monthly? This is something that you try to use as an entry signal. And then, of course, the other part of it being that if this downtrend is what's more critically in control, the 618 is always a typical spot for that to fail. So that is to say that given enough time, I believe Chipotle is headed into 2165. It may need to consolidate under this 1667 for a little bit longer, but I fully anticipate there being one of these videos that I do where we look at Chipotle, and it's got a similar situation to Wing, where it's piercing up into a new lifetime high, and then also McDonald's. So when you look at MCD, these types of charts to argue that they've gone too far and all of that, I believe those will always be floating around there. But from the same, or I would say the point of view that I use, from lower left to upper right, this is essentially a flawless trend. And if you see the way the last monthly squeeze resolved, that provided the push up into 271. And I believe the monthly squeeze that we have now is also going to be, seeing this as one of the companies that comes out on top. So those are a couple of long-term picks. Again, no specific options advice on them just yet. But then moving over into some short-term work with the S&P. Now, I can give you, let's do two conversations here. The first of which is, I believe, focused on what Thursday's open looks like. Right? Because here, Wednesday, after the markets have closed, you can see a little bit of a rebound on the back of NVIDIA earnings. And the first thing that I'll be watching for is any action above the high of the day, right? If you can get above 40.25 in the futures, that should prompt a move up into 40.37. I believe that will be tradable if you are short-term oriented. And then from there, I'm just going to have to see, does 37 turn you back lower, or is there room to maybe have a runner up into something along the lines of 40.60? So that's the directional point of view. And then finally, just one more idea that I believe is at least worth our time here. But when you think about the witching expiration, right? This will be the March expiration that is now 23 days away. It'll be here before we know it. But you think about the psychological value of 4,000, which is so close to where we closed today. And then you think about how those monthly, quarterly expirations just tend to have a little bit more weight. So what I want to get down to, and the main idea here is, would a strategy like a $4,000 iron fly makes sense? Now, there's several ways you can go about it. If you're familiar with the iron fly, doing that at 4,000, I think is a great direct approach. But then you could get even further and say, what about something a little more esoteric, where if we did a double unbalanced butterfly, right? So I'm going to use this with a short $4,200 call. I'm going to go down to the put side at 3,800 and do the same trade with the unbalanced butterfly, right? Generally being equidistant. You're showing, of course, the markets are closed right now, but you're showing in, very similar credit for each side of these. And then what this does is if you are in the 4,000 area at expiration, right, this is where you'll receive a credit on both sides of these. But then the difference in a strategy like this versus your iron condor, if you put on an iron condor and you have the short strike that is tested, that's kind of an anxiety producing factor, right? Because anything above those short strikes, you really start incurring a pretty big loss. But with the unbalanced butterfly, you welcome movement into those short strikes because that's where you create this kind of cat ear effect, or areas in your risk profile graph that will produce the most profit. Now, of course, you blow through those. There is risk involved, to be sure. But when you look at the market makers expecting a 170-point move, and you're pricing this out $200 wide on each side, I really do think this is a great, strategic way of approaching this market, and something that should give you a high probability of profit into that first witching expiration of 2023. So, as always, I appreciate your time. I hope you find some valuable takeaways from these video reviews. I'll have a great rest of your night, and I hope to see you in one of the rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.